Aloha, everyone. Welcome to Java with Lava. This is Thursday, August 10th, 2023. We are awaiting the CPI data. But first, I would like to mention something. We've got some issues going on in Maui. There are some huge fires. There's, as you can see, already some people that have lost their lives. We've got these fires are being fanned from the winds that are coming from the hurricane, which is going south of the islands right now. And I've got a couple cousins over there. They are firefighters in that. And my heart goes out to the people there. And I just want to dedicate this episode to uh, my cousins there and the people there. I'm very proud of you, very proud of you. And I'm just sorry I can't be there to help you. And anyway, if anyone would like to send out prayers to some of the people that are suffering there, I would appreciate that. Anyway, moving on to our markets. So we are expecting the inflation data to start coming out today. We've got some today as well as some for tomorrow and Friday. And the US consumer prices data, they're kind of expecting it to be slower inflation, which would be positive because it means the Federal Reserve will think that they don't have to hike as much. So that would be positive for stocks in general. And more important than the numbers, as we know, are the what they say, the language that comes out, whether it's better than expected or if we've got some more work to do, or depending on how they frame the actual numbers and data that come out. And, the data really doesn't matter anymore. We know that the numbers are cooked and they're not, uh, that the data is not real. However, the Federal Reserve kind of uses that as an excuse. They can move off of this data and still hike if they want to, or not, because they can use it as saying, well, inflation looks great. So, or inflation is still too high and we would like to hike. So it's more important to see what they say. And it's just everything, this whole environment, as far as the economy versus the market, so disjointed. They have nothing to do with one another. But anyway, we'll move on. So we're watching actually for equities stocks kind of recovering from yesterday was kind of soft. I don't know that we will continue the move down. Anything is possible. I do intend on being mostly liquid prior to the weekend. Futures are showing that the market is not really believing there's an issue here, as they're in the green. We will be watching the 10-year yield as well as the dollar, because if they're going to hike rates, it will strengthen the US dollar, and that will have uh, an effect. It will be a blow to other currencies and their purchasing power in relative numbers. So, on the real estate front, we had spoken about China's country garden yesterday and the risk that it had, that it's kind of mirroring Evergrande, possibly even larger. So, they did miss their interest payments, and that is causing an issue there. We haven't seen really, huge moves from it yet, but we've got to keep our eye on it. Along with that is the story back in the US regarding the mortgage credit availability that has sunk to a decade low. So, on top of less purchases of home prices because there's lower supply, less people are getting approved for these mortgages. So, what this is doing is this is kind of further exacerbating that divide between the upper and lower class, because the middle class, it's really separating them. So, a couple other stories in the forefront that are going to kind of play into the real inflation. We're looking at supply and demand. So, they've got a pileup right now in the Panama Canal, and they are talking about because of the drought. Well, this is kind of mirroring what happened during COVID when they had that backup with the shipping, and it's causing supply demand issues. So, along with the yellow story, we've got Federal Express, and they're talking about their elevated risk because they have been enjoying lower gas prices basically. And so that's lower cost for them to be delivering. Well, the price of oil, as we all know, is going up and will continue to, so their costs are going up. So this is going to cause some issues for them as well. An update on the currency wars, as I was talking about earlier, if the dollar gets stronger, it kind of battles other currencies. And the latest one is Egypt's inflation. And they are saying, according to their government statistics, 38.2%. So that means probably the real number is probably closer to the 60% range. If I had to make a guess, we can't really assign the numbers from here, but we're basically taking out one currency after another, whether it's Lebanon and now Egypt, and this will continue. It's going to be one after another. So the top 6 central banks, their gold demand is at an all-time high. Not only are they buying gold to purchase into their reserves, but they're also buying the gold mines, the rights to the gold mines. So this is something to watch. Gold typically is not something that you make money from, but you try to use it as a hedge and hold your value. So if the central banks are doing this, it's a large tell for how things are going. On the real physical war front, there's a couple of stories that came out. The U.S. is sending Marine warships to the Middle East and patrols with A-10s, which are the Warthogs. They are the premier fighter planes, over an oil tanker that was carrying oil for ExxonMobil. And Iran was trying to seize the ship, or at least stop it from going on. And as I said before, all wars are bankers' wars. This is over oil. They're going to make this excuse. We've been talking about this the last few days, how the U.S. has drone bases set up in the area, and it's heating up. War is the backstop for if they lose control of other things with their other policies and their fake this whole environment with the economy. So we'll keep an eye on this. I am expecting it to heat up. And we'll see. We've got Lockheed Martin and Raytheon, General Dynamics are all going to benefit from this. So this other story, the U.S. sending $200 million in military aid to Ukraine on top of everything that has already been sent. Weapons and ammunition. This, as far as I know, this hasn't been voted on, but this is inflationary as well. So this is kind of how it works and how they're going to continue this funding for the creation of money where the Federal Reserve is taking it down and the government is kind of inflating on the other side. So this is just, how they balance that teeter-totter and keeping things from crashing to their narrative of the slow downward spiral. So, a couple of things not going away. Inflation will continue. Taxes, of course, because we need to pay for the inflation. And inflation is just a tax that they don't have to bother talking to you about. They will just inflate away your buying power. We've got crypto that will stay. And I've got my opinions on that because we've got good and evil if we have to separate it in a simplistic sense. I do like Bitcoin. And I think ones that are evil, for instance, WorldCoin or Unicoin, central bank digital currencies, to avoid those. And I can do an in-depth on that at some time here soon. And artificial intelligence here to stay. Similar opinion with that, depends on who's programming it, who's in charge. It will be good, and there will also be some negative sides to it. So with that, I'm going to leave you off to your day because trading will be starting soon. Getting this out a bit late, and I need to check my audio. Hopefully this will work out. My apologies for any downgrade on that. So with that, I wish you all a green trading day, or just a wonderful day in general. If you liked anything here, please give it a thumbs up. And until I see you again, my friends, stay free.